Hello everyone. Are you planning to start a business but confused about which business structure to choose? This is a dilemma faced by almost every new entrepreneur. Sole proprietorship, partnership, LLP, or private limited company. Each structure has its own benefits and drawbacks. Choosing the wrong structure can create future challenges like a higher tax burden, funding restrictions, or compliance issues. In this video, I will break down each business structure in simple terms and help you understand which one is the best fit for your business. And yes, watch till the end because I will share a crucial bonus tip that 90% of the founders ignore. So let's start with the very first section, business structure options. First, let us understand the different types of business structures and their basic features. Sole proprietorship. A single owner business is the easiest and least expensive to start, but has unlimited liability, implying that the owner's personal assets are at risk. For example, most kirana stores, grocery shops in India operate as sole proprietorships. The next is partnership firm. A business owned by two or more partners where profit, responsibilities, and liabilities are shared. For example, two childhood friends, let's just say it could be Rahul and Ankit, start a marketing agency together, investing their own savings and dividing responsibilities. Rahul could handle client acquisition while Ankit focuses on campaign execution. They register it as a partnership firm to formalize their business and share profits equally. The next is LLP, Limited Liability Partnership, a separate legal entity that provides liability protection for partners, meaning personal assets are safe. However, LLPs have limitations in raising equity funding from investors. Example would be some famous law firms in India like Khetan and Co. and Shardul Amarchand Mangalas operate as LLPs to limit their liabilities. The next is private limited company. The best structure for scalability and investment offers limited liability but comes with higher compliance requirements like audits, financial reporting, and board meetings. For example, Flipkart, Ola Cabs, and Lenskart are all private limited companies. Now, let's start with the next section, which is registration process. Sole proprietorship. No formal registration is required, but GST registration, MSME Udyam registration, and Shop and Establish Act license are recommended for legal recognition and compliance. The next is partnership firm. Partnership firms do not require mandatory registration, but the partnerships are registered under the Partnership Act 1932, have legal advantages in disputes and contract enforcement. There is an example that you could use for reference like two friends like Raj and Meera decide to start a bakery together, investing 5 lakh rupees each. They register their business as a partnership firm under the Partnership Act 1932 to ensure legal recognition and credibility in the market. This registration not only helps them establish their firm's legitimacy while dealing with suppliers and customers, but also makes it easier to get business loans from banks. Additionally, their registered partnership agreement clearly defines their roles and profit sharing terms, ensuring the protection of their rights and legal framework to resolve any future disputes. Now, the next is an LLP, which must be registered with the Ministry of Corporate Affairs or the MCA under the Limited Liability Partnership LLP Act 2008, Private Limited Company must be registered with MCA under the Companies Act 2013, requiring name approval, incorporation documents, and compliance filings. Now, let's move on to the very next section, which is legal status and liability protection. Sole proprietorship and partnership are not separate legal entities, meaning that the owner is personally liable. LLP and private limited are separate legal entities. So the owners are personal property is safe from business debts. For example, if your business operating as a sole proprietorship takes a 10 lakh loan and fails to repay, your personal assets like your house and car are at risk. Now let's come to the very next section, which is taxation and compliance. Sole proprietorship taxed as per personal income tax slabs of the proprietor. Partnership firm 30% tax on profit plus surcharge and cess, just like LLPs and companies. LLP, 30% tax on profit plus supercharge and cess, same as partnership, but LLPs have lower compliance costs. Private limited company, 25% corporate tax if turnover is below 400 crore as per recent tax laws, or 30% corporate tax if turnover is above 400 crore plus surcharge and cess. Let's get started with the next section, which is funding and growth potential. Sole proprietorship and partnership can get business loans, but eligibility depends on the owner's or partner's personal credit, collateral, and business turnover. However, they cannot raise equity funding from investors. For example, most local restaurant owners rely on personal savings and bank loans for expansion. An LLP, however, can get business loans more easily than proprietorships and partnerships, as it is a separate legal entity. However, it can issue shares or raise equity funding from investors. The next is private limited. Best for investors, best for raising investment, angel investors, and VCs prefer private limited companies due to their structured governance and ability to issue shares. For example, Ola Cabs, ANI Technologies Private Limited, and Lenskart raised millions in funding as private limited companies. Let's get started with the very next section, which is transferability and business survival. Sole proprietorship, the business dissolves in case of owner's death or retirement. In partnerships, the firm may continue if a partnership deed includes a clause for continuity. LLP and private limited. Ownership can be transferred and the business continues beyond the founder's life. Since these are separate legal entities, their existence is not affected by the death or exit of partners or shareholders. Example would be companies like Reliance, Infosys, and TCS have survived multiple generations. Now, coming to the very interesting point that we stated at the very initiation of this video, which is the bonus tip. 90% of founders make this mistake. Many founders start as a sole proprietorship or partnership, but as their business grows, they have to shift to LLP or private limited, which is costly and time consuming. If you want long-term growth and funding, it's better to register as an LLP or private limited company from the beginning. So the conclusion from this video would be choosing the right business structure is crucial and decision that will impact your business for years to come. Tell me in the comments which business structure are you considering for your startup. Do not forget to like and subscribe. More business and legal tips. And if you need help with registration, check the link in description below.